Noah, over the last 2 days, we've seen this market firm up, especially on reopening and cyclical stocks on hopes of a deal for stimulus. But I still see no deal. So is this market riding on hopes right now?
It is. I think there'll be a deal that will come through, but we're still operating in a global pandemic. So we're still telling investors to be cautious. Consider holding more cash, consider hedging. Not yet. Today will be a great day. I think we'll get some stimulus done, and that will help the market as well. But I think as we get within days of the election, at least we're telling clients to start to pare back in their equity exposure in their portfolios.
So you mentioned hedging, not yet, maybe today after the bounce. What you're saying is look for rallies as opportunities to hedge in terms of what? Using options, just looking for downside protection?
Yeah, I mean, options definitely. You got to be an expert or work with a financial advisor, of course, to use those. But simply going to cash, not putting new cash to work in the equity markets, and consider selling, especially where you've got, qualified plans, the retirement plans that aren't taxable. You can make those more tactical adjustments without the tax impact. Sell some off and go to cash. We feel like there's three scenarios that we're looking at as we go into the election. A Biden landslide, which we think would be good for the economy, but not so good for the market. So that we want to be hedged for. A Trump landslide, if that were to happen, I don't think the market goes, much higher. We're at all-time highs now. We're still in the middle of a global pandemic. And then there's the chaos option. And so you want to be hedged. The market's not going to react well to it. So almost in every scenario, we feel like now's the time to start adding protection.
So it doesn't sound like in your scenarios here, there's one that's particularly explosively bullish. One of the takes I hear right now is that you've got Democrats waiting they said they've wanted to spend trillions, 2-3 trillion, even bigger than the original package for the economy. Does that not present some either rotation opportunity? Is that not an outright a NASDAQ positive possibility if you do get a Democrat sweep and the money printer gets turned back on?
I think it, depends on where the money goes, right? And quite frankly, the money should go in people's pockets, the ones that are having trouble making their rent payment and the ones that are having trouble making their car payments. But I don't think that brings the market back up, right? That helps the economy. Now, if the Fed says they're going to increase those purchases, then I'm going to change my answer, of course. But for now, going to cash, using, short equity hedging tools, we think is a more prudent approach. And we hope that, that stimulus package gets done. But again, that may not mean good things for the market. It just might mean good things for the American people, which is definitely a good thing.
I think that's a really important point to reiterate here this morning. We talked about it a little bit here last week, but in March, when you had fiscal support, monetization from the Fed, or whatever you want to call it, the Fed being there to backstop, and then also firing their own separate bazooka to plug the gaps of liquidity within capital markets, all that. Right now, we're talking about something that is more specifically either checks for individuals, hurts, maybe everyone overall, we don't know any details yet, but specifically the thought is that it's going to be a little bit more targeted. So that, it sounds like in your mind, is different in terms of the market response when you don't have the Fed with their own separate tools that they're applying.
Right, I agree. I mean, if it's just, money in citizens' pockets, which is a great thing, I don't think that's enough to turn this market around, right? It'll help in a lot of different areas. And it's just, as you pointing out the difference between how the economy reacts and how the market reacts. And it's even with money in people's pockets. Is everyone hopping on planes, and is the economy going to revive back up again? No, it's going to help, though, a little bit, but it's still not going to get the economy where it needs to be until we solve this issue with the coronavirus.
So right now, where does that lead clients? Where do you see? What are they interested in? I know that you guys have hedging tools for the ETFs you provide. Does that mean that they're not going risk on, avoiding the more growth-oriented funds?
Absolutely. So we've got two shorting products depending on your approach to the market. I know some people favor more of a technical analysis approach. DWSH, run by the Dorsey Wright team, is a great short equity ETF, or a more fundamental approach. We have HDGE to short the markets, but we think there'll be pockets. I mean, you kind of mentioned in terms of a tech opportunity, the Amazons and the Netflix and probably the Zooms of the world continue to grow. So there'll be pockets of opportunity. We, of course, again, some of the products that we have in our lineup, like the Vice category. story. We think those can be recession-proof types of stocks, and so you've got companies, such as Boston Beer Company, Sam, who bought my favorite beer company, Dogfish, and then you've got British American Tobacco, you've got Trulieve, right? Look at the cannabis space as well. We like those stocks regardless of what happens in the election and how long it takes to get the economy back up again.
ACT, the Vice ETF from your firm, has those that you describe as staples now. The YOLO is under your guys' umbrella as well, right? That's the pure cannabis play, correct?
Right, and we just launched MSOs, which is just a U.S. focus. So companies like Trulieve, Curaleaf is the largest, cannabis company based here in the U.S., and MSOs is the only ETF and YOLO that have exposure to those stocks in the U.S. And we think in the areas of growth in the cannabis space, U.S. is the place to be.
Okay. Now, when you look at the shorting side, I want to come back to DWSH for a moment. Obviously, that did really well as the market dropped. Since then, of course, it's lagged. What is the actual composition of this? Is this an actively managed fund where there's a portfolio manager somewhere buying, selling, picking on a discretionary basis, or is it algorithmic in the nature of how it shorts?
So DWSH being technical, well, they're both actively managed. DWSH uses relative strength, but sort of turns it on its head, right? We're looking at the stocks with the highest relative weakness, and those are the stocks that we're going to short purely on a technical basis. It has nothing to do with the company or the management or their business models, just what the numbers tell us that are the ones that are demonstrating the highest weakness. We're going to ride that trend down in this short portfolio. So yeah, it's an actively managed stock selection. And then Ranger on HDGE is fundamentally driven. Those guys have a forensic accounting background. They're looking for companies that are trying to enhance earnings that might have trouble in the next quarter or two. Not saying they're bad companies, but same thing, stock selection. And we think that's a better way to go. True short selling, active management, those products that short the entire market, the good along with the bad, or have a daily reset. Unless you're a sophisticated investor, those are hard to use within your portfolios. Those types of tools we can hold for the cycle, and historically they've shown that they've done well in those downward time frames.
Okay, so hang on to the pot plays and the Vice as the sort of uncorrelated trades. If you want to get downside, use the shorts. And the last part I see in your notes is you called the Braveheart approach, just holding into the election. Who's that a message to?
It's a message just to investors, right? Don't start selling out of the market right now. Today's going to be a good day, so hold on your portfolio. But I think day or a week before the election, we're going to send the troops running in terms of getting defensive, getting into cash, and shorting this market at least for a little while.